if the answer is Bitcoin, the answer is yes. But if the answer is like a bed and breakfast, in the middle of sub-Saharan Africa in a war zone, the answer is maybe not. And if the answer, and if it's Leonardo da Vinci's Mona Lisa or something, probably yes. But if it's like the 97,000th, print of the 97,000th most famous artist, maybe no. So do the globe-trotting billionaire test, right? Call it the Bernard Arnault test, right? Would Bernard Arnault want to buy your thing in a decade? And if the answer is yeah, then that's good. And then the second question is it easy to manufacture using machines and factories? And if the answer is yes, it's probably not a good investment. And then the third question is, can the robots make more of it? Or can the AIs make more of it? And if the AI bots or the robots can make more of it, then probably it's not a good investment. Like those 25,000 crypto tokens that took you like 4 hours to create, well, the AIs are going to create them in 4 seconds. And pretty soon there's going to be 25 million of those crypto tokens. My number one advice is just dollar cost average into Bitcoin. And if you have money that you don't need for the next 4 years, that money you sweep into a Bitcoin investment. Bitcoin's the apex property. The longer, and then you let time work for you. The longer amount of time you have, then the better off you'll be. I generally think, Bitcoin is the apex property. The conventional mediocre properties are either high quality real estate or high quality stocks, the S&P index. If you wanted any other idea, like today, I would hold extremely highly desirable real estate that everybody's going to want, or unregulated monopolies that are big tech, unregulated digital monopolies. But both of those are inferior to Bitcoin by a lot. So if you want a diversification, you hold unregulated digital monopolies and you hold extremely luxurious, desirable, prestigious real estate. And everything else is probably going to be a loser. Holding cash, holding bonds, holding any other run-of-the-mill stock or whatever. It's just the world is too risky. And in terms of how you accumulate wealth, you have to work pretty hard at something, whatever it is. You have to be good as a doctor or a dentist or IT professional or whatever. You have to do something to generate cash flow. And then you look to acquire the apex property, using your cash flows or using equity or using debt, intelligent debt, right? If you could have gone back 40 years and someone would have loaned you money at reasonable terms in order to buy, a city block in New York City or Tokyo or London, you would have done okay. And that's reasonable. You buy high quality, levered long property. But it has to be intelligent debt that you don't get liquidated on. It needs to be a long-term mortgage or very cheap debt that no one's going to call on you. Otherwise, if you could raise equity, right? If to do something, if someone's willing to invest in you, you're a money manager, so you go and you raise capital, you invest it in Bitcoin, run it for them, then that's a business. Or if you're a business, if I had a business and I could sell equity in the business so as to buy Bitcoin, that's a rational way to do it too. So you can use equity, you can use debt, or you can use cash flows. And so those are the three ways you get the money to invest. Thinking you can trade is overconfidence. There's statistically a 99% chance you'll fail. I think in one of my presentations I showed like literally 1% of the days is all the movement. So if you're trading the other 99% of the days, you're probably failing. Right. There's a 99% chance you'll fail if you try to trade. There's a 99% chance you'll fail if you try to pick stocks. There's and that just leaves you with the basic notion, which is proper asset allocation. You pick apex property that what do you want to own? Here's some simple rules. You want to own something that in a decade, a person richer than you and smarter than you will want to buy from you.
Don't forget to join us as we continue to explore the unfolding events. What's happening in the crypto market? Let's take a quick look at some recent developments. Then we turn back to Michael Saylor. Bitcoin falling back to $25,000 would mark its last big dip before the next BTC price bull run, says Cane Island's Timothy Peterson. The Lightning Network is growing, but liquidity issues and a need for greater user awareness continue to hinder mainstream adoption. Bitcoin network adjusts. Mining difficulty rises 0.12% to 52.39 trillion. Fed launches new crypto oversight program. Issues dollar stablecoin guidelines. SEC seeks to appeal Ripple XRP ruling. Requests stay of proceedings. UBS expects US dollar dominance to persist for years to come.
I would say that Bitcoin fixes everything. If the answer is Bitcoin, the answer is yes. But if the answer is like a bed and breakfast, in the middle of sub-Saharan Africa in a war zone, the answer is maybe not. And if the answer, and if it's Leonardo da Vinci's Mona Lisa or something, probably yes. But if it's like the 97,000th, print of the 97,000th most famous artist, maybe no. So do the globe-trotting billionaire test. Right? Call it the Bernard Arnault test. Right? Would Bernard Arnault want to buy your thing at a decade? And if the answer is yeah, then that's good. And then the second question is it easy to manufacture using machines and factories? And if the answer is yes, it's probably not a good investment. And then the third question is, can the robots make more of it? Or can the AIs make more of it? And if the AI bots or the robots can make more of it, then probably it's not a good investment. Like those 25,000 crypto tokens that took you like 4 hours to create, well, the AIs are going to create them in 4 seconds. And pretty soon there's going to be 25 million of those crypto tokens. So what is it that the robots can't make more of? What is it that AIs can't make more of? What is it that the government can't print more of? The government can make infinite currency. It can make infinite bonds. Companies can make infinite stock. And, we can make infinite music, infinite art, infinite entertainment. You can't make more 1-acre properties in Palm Beach. You can't make more acreage on the beach in Miami or Palm Beach. You can't make more land with a robot or a factory. So land in the Hamptons, like highly desirable beachfront property where all of those billionaire, rich, erudite, educated, beautiful people want to live, that stuff is probably valuable. Yeah, unique things in Western civilization, right? The Mona Lisa are valuable. Scarce, desirable assets. Bitcoin is valuable. All the AIs taking over every computer on Earth can't make more Bitcoin. All the governments can't make more Bitcoin. All the factories can't make more Bitcoin. Right? So once you figure that out, then it's pretty clear if you're not going to just be all-in Bitcoin maximalist, then you want to diversify. Buy things that human beings and robots can't make more of, and then you'll probably be okay. The protocol is going to infuse everything, and we shouldn't be afraid of all the different ways that people choose to integrate, wrap, embed, or execute with Bitcoin. There's no one right answer, and the marketplace will determine the right mix of integrations